Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and we're going to be talking about family offices today, and not just anything about family office, but more in particular about building startups and how they may or may not be investing in early stage and direct companies as well. So we're going to talk about the entire family office space, what's happening, what you need to know if you're looking to work with, build, or invest alongside as well. And we've got great guests with us, co-hosts today, as a matter of fact, since we've got a little trio. Everyone's been upgraded to co-host versus panelists, but make sure you check out us on LaToken.com for more episodes of VCTV. Make sure you click subscribe, share, and like the episode as well. Comments box is open. Feel free to share your thoughts and insights and comments, questions, and we'll do our best to ask those in real time. Big thank you to the LaToken team and to Maria for making today's episode of VCTV possible. With that, Gary Fowler, welcome back to the show. A little introduction and a little background.
Yeah. Thanks, Kyle. My name's Gary Fowler. I'm a serial entrepreneur and investor. Great to be here as always. And I've got 17 startups under my belt. I've been involved in 2 unicorns. I was on the original management team of Click Software, which was sold to Salesforce about a little over 2 years ago for $1.35 billion, and also Eva.ai that I co-founded a little over 2 years ago. Oh, time goes fast when you're having fun. Anyhow, I'm the CEO, co-founder, and president of GSD Get You Done Venture Studios, a premier AI and quantum venture studio located in Santa Clara, California. We take operational roles in companies. We curate them from around the world, from Africa, from Indonesia, from Europe, from the US, and the idea is to be able to help them maximize their potential. And Kyle, we say unicorns, but unicorns are mythical creatures. They don't exist. So it's kind of funny when I strive to something that's not real. Our goal is to make them real.
It is, and you guys are doing a great job at GSDV, but also in general. I mean, you work with a lot of companies, both as an investor and as an operator and an advisor as well, working with these companies to help mold them at their earliest stages as they grow. And we're going to be talking about that here in just a minute. But before we do, David, welcome back to the show. It's been a few minutes, but nonetheless, a little shout out, a little introduction to those who may not know you.
Sure. My name is David Towell. And I have been a hedge fund professional for 15 years now. I've run a few different asset class and strategy focused funds. Most recently, 3 years ago or so, started a cryptocurrency and blockchain focused fund with a multidisciplinary strategy of investing. However, for purposes of this conversation, I have been interfacing with family offices for purposes of investment, co-investment, and otherwise for over 15 years now. Prior to that, I was a trader and investor at Credit Suisse, and then before that, I practiced law at some prominent New York firms.
Wonderful. Let's jump right in. So, David, you work with family offices, you have in the past. Talk to us a little bit about that experience, and are family offices looking at getting into startups either as investors or building their own? I mean, typically family offices have family businesses, enterprises, corporations that they're running, which allows for them to create these family offices. So, are they getting involved in the startup game either as an operator or as an investor? In your experience?
So I think it's very hard when talking about family office to paint with a broad brush. Certainly, we can go ahead and I think for purposes of this conversation, discount the very ends of the bell curve, meaning, family offices, with a little bit of money, but principally focused on the family business, which generates, cash flow that is generally, used, consumed by, or, paid to family. And then there are very super duper large family offices that effectively, for all intents and purposes, absent the familial relationship, are institutional investors. So let's take out those two pieces and then let's focus in on the middle. And even in the middle, there are tons of gradations. There are family offices that still operate a business, and there are family offices that have fully exited their businesses and now just have or have had a pile of cash capital to go ahead and invest. So you can assume, if you still have business to run, you've got to focus a bunch of time on that. And if you don't, you can obviously focus, 100% of your time on investing. I will say this, however. So, now I've laid out all the differences. The common point I'd say over the last bunch of years, and I think it will continue, is that the family office space generally gets more and more sophisticated, and becomes more and more reliant on its own resources, or cultivates its own resources to do its own direct investing. The same way, institutional investors did that, and did a lot less investing through third-party managers and hired their own folks, whether that be an endowment or a foundation or a sovereign wealth fund. Similarly, the family office space has done that. And there are a lot of resources that are available to family offices for free, that educate them and allow them to get up the curve very quickly. The last point I'd make before, closing those introductory remarks, is that the risk profile temperament of each family office is different. They view risk differently. They view different asset classes with differing levels of risk associated with them. And it usually comes from A, being informed, and B, maybe more importantly, their experience. So if you've got a family office that built its money off of tech investing, they're very likely to be able to understand and more inclined to invest in a genuine, bona fide tech investment. However, the family office made their money in coal. It may be a very different view, simply because they may not have as much experience to a technology-based investment, or even further along the risk spectrum, something venture-based, which frankly is building from the ground up.
No, that's a very, 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 very good point. Gary, anything to add, but also your experience? Well, first off, anything to add, and then would love to hear your experience working and having a family office and building startups as well.
Yeah, I mean, the situation, Kyle, is that this is a great opportunity. The family office is a lot more liberal than they were before, and they're really looking for the early stage and growth stage companies. So, it's a great time. And the thing that's a lot different that we're finding today is that these family offices, in order to preserve multi-generational wealth, are actually being very direct in terms of dealing with startups. So they're reaching out a whole lot more than they've ever done before. It's really exciting times with them.
Absolutely. And in your experience, so as you have worked with them, are you seeing them get into the startup game as the three of us have before, working from the ground up, bootstrapping a company, whether it be aligned with our businesses or if not, because as I think David pointed out, is, traditionally family offices are building alongside other businesses or things that might be comparable to their businesses. But for entrepreneurs, that's not always the case, right? You've got an idea, so you start it and you go from the ground up and hope that it works, and sometimes it doesn't. So with your experience, Gary, and working with a lot of family offices, what is that approach that you've seen them take?
I would say that most of the family offices, depends on how big the family office is and whether or not they're multi-generational or single family offices. But I would say if they're, it's a really double-edged sword. On one side, they're really interested in AI and quantum computing. So they're looking outside of the box because they understand the huge impact. On the other side, they like to keep many of them like to keep the technology in line with what their business goals are of the company. Obviously, when you're dealing with, artificial intelligence in particular, it crosses multi-vertical markets. So, where is the real intersection? The key is, it's everywhere and can be used for most of them. But what they're looking for is they want to get involved, and, they also want to have an impact, right? So there's a lot more impact investing, and it's really to the point where before they didn't really talk about it as much, but there's really they're pointed conversations around what kind of impact, whether it's social, whether it's renewable energy, whatever, circular economy, what kind of impact can they have? And they're, in fact, I probably shouldn't say online because I'm going to meet with some people tonight, but they're.
It's okay. Don't say it. Don't say it. Just very general. There are great family offices who are around the world looking to start building companies.
Some of the top family offices on the planet Earth, Kyle, are literally very, very aggressive to find really cool companies because, one side of it, they're curious. On the other side, they realize that with the amount of data around us, that areas like deep learning, machine learning are going to have a powerful, powerful impact on their businesses.
So here's a big question for you. So when people say, pardon me, finding cool companies, finding startups, what does that mean, finding? Is it to invest, or is it finding ideas to collaborate or things to begin and get involved with? Because, as investors, we're finding startups for deal flow, right? We're looking to invest in those companies. But as a family office who runs businesses and operates, et cetera, we may be looking to do a lot of things. So in your experience, what does that generally mean with those that you're talking to?
No, that's a good point. So let me tell you. So first of all, I'm a country boy from Pennsylvania. So keep it simple, stupid, right? First of all, it's their money. It's their family's multi-generational wealth. And if you've got your name is the name of that company, there's a high probability you're going to be able to do the name of the fund, some extraordinary things you can do. You have more freedom to be able to choose. So yes, they want companies that are akin to their businesses. At the same time, they're looking for high growth, high potential companies. Look at like Apple, right? At the beginning of Apple and some of the largest families in the world, I'm really cautious about it because we're starting to deal with a lot of them. But the other thing, and by the way, Kyle, they're on your show, right? So those family offices, many times we don't know, but those exact folks are on the shows and they're looking for opportunities to invest. High growth, high potential opportunities. The difference with the family offices is that it's like a closed-knit community. You can't, it's not like you can call them up. It's really a closed society. And one family office, as you know, right, refers you to another, and you got to have that door in. And by the way, you can't abuse those. It's just like dealing with anybody that's super high net worth. You can't abuse those relationships. You got to it's about the business. And of course you develop friendships and that kind of thing. But the key is they're looking for deals, and they're looking for deals to take into their family. So what you want to do is you want to make them look good. Are they building? Are they willing to invest? Well, they're doing earlier stage companies, right? They really like, seed stage and early stage companies. So of course they want to build, and many of them have incredible talent. It's not like it used to be. They have talent and they're interested in how that exactly. And, by having that name and taking you into the company that has their name on it, it makes it a whole lot easier to get a partnership, right? It's not, what are you going to say? No?
Possibly it's a good question. To both of you, and David, we'll let you kick us off. Working with a family office as an entrepreneur, is this a good decision, or is it a decision to really think through and consider? Because if you've put your blood, sweat, and tears into an early idea, and a family office comes along and wants to work with you on that, how should you be thinking about this? What advice would you have for those founders looking prospectively to work with family offices?
You're not going to like the answer. It all depends.
Okay.
You really need to, if you're going to put as an entrepreneur or someone looking for investment capital, and you're going to put either all or a very large portion of your eggs in one basket, you better be really comfortable with that basket. In the sense of, general alignment of interests. And that could be financial interests. That could be enterprise interests. growth prospects, trajectory, business plan, all those things. You want to be able to see eye to eye. Governance related issues, because certainly you're going to want to continue to have a stake in your project, a meaningful stake, and an important voice. There's personality issues. You want to be able to reach decisions easily and effectively implement them. And then you also want to know about additional growth capital. What happens if I need more money? Is that family office capable? Do they need to bring in others? Do they like bringing in others? Are they a very exclusive family office? And frankly, they play a zero-sum game with the rest of the world. All of those things are very important to keep in mind and to be brutally honest with yourself about them, right? Don't go ahead and convince yourself, that people are particularly good and easygoing when or when you have evidence that they're not, that they haven't been, that they're very, they're tough as nails. And it's okay if they are tough as nails. If you're okay living with it, or if you have the right, relationship or understanding with them, then that's fine. So I think there's a lot of digging and diligence and then soul searching that needs to be done before pulling the trigger. Now, let's be honest. Sometimes beggars can't be choosers. So you may get an offer from a family office that doesn't check all your boxes, but you don't have, the choice. It's either this or nothing. So, sometimes you just go ahead and go with whatever it is that, has come your way, and you're going to have to make some sacrifices or go in, knowing certain things aren't going to probably work out the way you want.
That's a great point. Gary, anything to add on to that? I mean, I think it's a pretty good painted picture, but anything to add in your experience as well?
No, I mean, you said it, eloquently. It's, there's a lot we can say about family offices, that
Mhm.
for sure. And I think that, for the entrepreneurs that are out there, that the family offices are very, very interested in tech investing. The key is to get in that door. It's not like dealing with a venture capital group where you can send over your pitch deck, et cetera. You need to have a qualified, vested person that takes you in the door to meet with them, because they do check you out. I got to tell you, I was here at the VIP section of the Equestrian Sports dealing with some of the wealthiest people on the planet Earth. And as soon as they met me, they were on Google checking me out. And I'm sure the security people were behind the next level of it, but they literally were checking me out on the phone. And these are people that have founded some of the largest companies on the planet. It was amazing. So
Kyle,
you got to.
I will add one thing. Oh, I'm sorry,
Yeah.
Gary, you didn't finish. Forgive me.
No, this was what I wanted to say, David, is you got to have a vetted introduction to those folks. As you know, Kyle, you've given me one recently. You got to have a vetted introduction. And once you come in, you got to make sure that, what you say you do. And that's, there's an opportunity for that family office. And if there's a connection with their family business, that you talk about it and you draw the conclusions to give them the, the fuel for it. Sorry about that, David.
No, it's okay.
Go ahead, Dave.
I was just going to add another point, which is there may be, in certain family offices, it may be a well-oiled machine. There is a clear process from beginning to end. In a lot of family offices, there isn't. And sometimes you have to navigate, somewhat choppy waters because, frankly, they just do things on a catch-as-catch-can basis. And sometimes that's particularly difficult. You may have to jump through a lot of hoops. It is important to jump through all the hoops, but it's also very, very important early on to figure out who the decision maker is. I think, certainly anybody could trip you up and, throw you out the window. But in terms of finally getting the seal of approval, it is important to know who or whom, a bunch of people maybe are the decision makers, and especially in multi-generational family offices. And mind you, every family office is like a family sometimes, where not everybody sees eye to eye, and everyone, in a way, can pound their chest because everybody thinks that they are either the owner of or inheritor of the fortune. So I think it's just, it's certainly very different, potentially very different than dealing with a for-profit or even non-profit, institutional investor.
Good point. Let's flip the script. So, advice that you both have for family offices looking to start building a company from the ground up as a startup or working with early stage companies. As I feel again that there's maybe some education that may need to be provided there. So let's flip the script. To the family offices that are listening, what advice would you both have for them looking to begin working alongside or with startups of all shapes and sizes? So Gary, let's start with you and then we'll come back to you, David.
Yeah, I mean, the situation is they need to figure out what they want, so they've got social impact objectives, that's door number one. If they're into climate change, that's door number two. If they're into distributed opportunities, that's door number three. It's really, what do they want? If they're into AI and quantum. So first of all, make sure that they're lined up with their other family members in terms of investments. And, you don't want to have, on the family office side, you don't want to have a bad reputation in the startup community that you're not easy to deal with or you don't treat them the right way. So you need to really feel culturally sensitive to the startup because it is an entirely different environment. The other situation is, you want to look at where there are high impact, high growth areas that it's going to really financially benefit the family, so what kind of technologies are interesting that have the upside potential that can really scale. So the normal due diligence that you would do in a startup. So if I was them, I would somehow, if they don't have the experience, I would somehow get associated with a VC firm so they can get the experience to understand, maybe even join a startup at some point. I've actually had that happen. One of the wealthiest families on the planet actually had one of their daughter joined us for 1 year and actually was working for us in marketing. And I mean, unbelievable jobs she did, but those kind of things. So you have the practical experience, because if you got a company that's 150 years old and you haven't done startups before, it's an entirely different environment. There are pains, startups don't have a lot of time to talk. What they want to do is they need to have action. They need to move forward. It's either do or die, which is a little bit different. The first MBA program at Harvard was to teach managers how to manage, not how to take risks. Some of those families don't want to take risk. So it's a different kind of a mentality. You got to make sure that everybody buys off on the risk and the adventure, and they're not all going to work.
Mm-hmm. That's a great point. David, anything to add? Your advice, your thoughts?
Yeah. So look, I think generally in investing, you're looking for the best risk-adjusted return. Mm-hmm. So as a family office looking to build, the first part I'd focus on before the return part is I'd focus on the risk part. And there are so many free resources for family offices to get educated. And there are other resources that you could barter for, like Gary's example, although I'm sure it wasn't a barter, but if someone were to tell me, I'll invest X amount of dollars in your fund, but I want you to go ahead and have a very close relationship, maybe not an internship, maybe just a monthly call, weekly call, whatever, with somebody in our office to go ahead and keep them updated and really learn through you. That's another way. Mm-hmm. And then the next step is to go ahead and invest in resources, right? To go ahead and actually pay somebody internally or externally to go ahead and reduce your risk and become your eyes and ears or your expert on a certain area or a certain business or enterprise or investment or whatever. I think all of that is great. Now, the next step across the spectrum, which I think is for many family offices a little bit too far of a stretch, is to say, okay, I've learned all I can. I'm going to do it myself. I think that sometimes family offices get too far ahead of their skis and say, look, we can do this, not realizing that the other person that taught them essentially does this as a full-time job. There is no, other part of the family business that this person is doing, that the, actual worker bee, the person they're investing in, is doing. So so at that point, after all that education, the free, the bartering, the paid for, you then focus on the return. You've adjusted your risk as much as you can. You've brought down your risk. You're a very, very informed consumer investor. And now you're going to go ahead and pick the best jockey in the race, right? You've decided that you want to get into industry, business line, technology, idea of X. And now it's a matter of going out and finding the best creator of the mousetrap for what it is that you've decided to focus on.
That's both very, very, very strong points on both sides from you and Gary there. It's exciting. I mean, there's a lot to be had here and still more opportunities. And gentlemen, I want to come to you both for closing thoughts and make sure you get a little bit of time back in your day to potentially talk or work with those family offices as well. So, Gary, let's start with you. Closing thoughts as to what maybe entrepreneurs, again, need to know what this all means for family offices starting to get into the startup space, but your closing thoughts, and then, of course, where you can be found for those family offices that may be looking to connect and work with you, or startups looking to join GSDV.
Yeah. So, first of all, for the entrepreneurs, listen, you want to go where the money is. This is very simple. It's like fishing. If you want to go out to catch fish, you go to the body of water where there's a lake or a pond where there are fish. So the family offices, they're eager, they're interested, they love technology. Figure out a way to be able to get the word out. I've said this many times, but I'll reiterate it. Make sure you've got an online presence. Make sure that you do speaking engagements. Make sure you write a bit, because they're going to check, they're going to Google. Make sure that you've got a nice website, that things are done professionally. This is selling. You got to make sure, as Bill Reichert says, you've got to wow them. So that's door number one. And there is an opportunity. There is pent-up demand from what I see for early stage funding from family offices. They're excited about it. They like to talk about it. They like to talk to their friends about it, about how they're investing in the next Twitter, literally. So what I would do is go down and, you need to figure out where they are. You need to be able to get them interested. So where are they? They're online, just like here with VCTV. So if it was me and you've got a startup, I would be right here pitching the startup, because those family offices appear on these shows and they watch these shows. So that would be door number two. And the third thing is, it's about moving fast. When you do a startup, it's about coming out of the gate running and keep running. And, one of the things that Andrew Straczynski, who's a right-hand man to Rupert Murdoch, told me a number of years ago at dinner was, remember, I said, what's the number one thing that the top entrepreneurs in the world have in common? He said, I've studied 3,000 of them. In fact, he's the one that bought the Wall Street Journal for $4 billion. He said, amnesia. They don't let the past hold them back. Go forward, move forward, and if you've got to pivot, you pivot. It's not like making the wrong turn. It's about correcting. So there's a great opportunity out there. You can reach me, Gary Fowler, on LinkedIn or Twitter. I'm happy to respond back. Check out my shows. I have a number of those top investors, including Kyle, on the show. Just go down through, listen to them directly, and focus, and you can get the job done. Lose LinkedIn, although most family offices do not respond directly. From my own perspective, you've got to have a vetted introduction to get them interested, because they're just cautious. They're high net worth individuals, and they don't want just everybody coming up to them.
Absolutely. Thank you so much, Gary. David, to you, closing thoughts. Where can you be found online?
Sure. So my closing thought is I'm a very practically bottom line minded guy. I think the most important thing is to not waste time, yours and somebody else's, and to really go, I wouldn't say the path of least resistance, to go with the lowest hanging fruit. Not to say that long shots don't happen; they do. But if you're pitching a certain business, venture, investment, and that a certain family office has done this type of investing before, I'd go there before trying to educate from the ground up some other family office. It may be a waste of your time, a waste of their time, and I would say it on both sides of the spectrum. I mean, certainly family offices are entitled to go ahead and listen to the pitches that are being offered to them, but if it's just for education purposes and it's not necessarily for actionable, or it's certainly not actionable now, maybe a 2-year horizon or something like that, it's helpful to those folks that are pitching investments and ideas as well. There's nothing wrong with staying in touch. There's nothing wrong with learning from each other. But I think if you want to be practically minded, if you want to go ahead and execute shortly, you should go to the things that you're going to be able to execute on in the near term. And for those things that are going to take longer, just be transparent and explicit about the fact that it's going to take a longer period of time before anything actionable can be expected. And I could be found best on LinkedIn, David Towell, and you can reach me by email at david@prochaincap.com. It's david@prochaincap.com.
Thank you very much, David and Gary. To our audience, thank you so much for tuning in. If you like what you heard, make sure you click subscribe, like the episode, share it as well with friends and family offices that may be within your network to learn a little bit more from Gary and David and my perspectives as well. And also make sure you check us out on LaToken.com to hear from both Gary, David, myself, and other members of the VCTV family as we break down different technologies, industries, and regions around the world for you. And a big thank you to the LaToken team, along with Maria, for making today's episode possible. A big shout out again to the entire LaToken team, along with Gary and David. Make sure you reach out to both of them, add context where you heard, where you met them, and what you would like to continue the conversation about. I'm your host, Kyle Ellicott. You can find me along with Gary and David on all social media. And again, check us out on LaToken.com. We're going to take a little bit of a break, and we'll be back here tomorrow with more VCTV. Everyone have a wonderful day.
Thank you.
Bye-bye.
Bye, everybody. Thanks.